Started now by just again sort of officially welcome you, Simon Massey from Trade Room Plus, trading volatility. Over to you.
Thank you very much, Simon. Okay, so yes, I'm sure everyone's found this period rather interesting, no matter how long you've been trading, and you think you maybe have seen it all. You probably haven't until the current thing. So I wanted to sort of share some of my experiences over these past sort of 6 weeks or so, where we've seen this crazy volatilities. I want to talk to you about some of the strategies that are working for us. I want to show you some live trades as well. I have some recordings from some of our live trade sessions, and I want to make some general points from many years of working with traders at various stages of their sort of trading journey, if you like, from absolute beginners who don't understand anything to seasoned professionals who may have left the institutional industry but still want to be a part of a trading community. So I'm going to be talking about the adaptations that people have had to make in volatility, some of the opportunities it's presented, some of the risks that heightened. I mean, trading is a pretty difficult, risky business anyway. If you've got any experience trading, you'll know how tricky trading is. I'll talk about the trading paradox and how that's going to tie in some recent trade examples. I do have trade examples, like I say, recorded to sort of emphasize that trading paradox. I'm going to be talking about some of our current open positions as well, and maybe where I anticipate they're going to go, and having a quick look at the market as well, because of course, as a trader, you're always looking for that next opportunity. It doesn't matter the path, you're only as good as your most recent trade, whether that's a discipline win, discipline loss, or anything in between. So it's about maintaining that consistency. The challenge for the professional trader is staying the professional trader, very much like the professional sports person. It's keeping consistent and it's keeping performing at that high level. Now, briefly about me, I've been running a trade room since 2013, been offering copy trading since mid-2019. And I'll talk about briefly why I trade. I mean, for me, I was always interested in helping other traders, building a bit of a trading community as well. I mean, I've never really been interested in trading courses. That's fine if other people want to do that. For me, it's always been a case of like, endless theory tests instead of actually driving a car. You've got to get in the car and drive. And to sort of further that tenuous analogy, I expect my driving instructor to be able to drive themselves. So from our point of view, it's always been a case of, let's do a live trade room. Let's live through trades together. What we're looking at, we can learn. That's the best way to learn in trading, is getting actual skin in the game. In terms of running a trade room, it makes me a better trader as well. There's a sort of individual benefit from that. It makes me accountable. It makes me constantly thinking about doing the right trades. If I make a large trading error in front of 300-400 people, whatever trading error that might be, over leveraging, adding to a losing trade, revenge trading, all the things that cause traders to fail, my trading community are going to say to me, Simon, why are you doing that? So it holds me accountable. There are stresses and challenges, as you can imagine, certainly with copy trading and trading a significant sum of money for people. But, I think a successful traders are motivated by continuous growth, continuously trying to push themselves and become better, incremental gains, if you want to, again, put it in a coaching context. But I think that's the mindset you have to have as a successful trader. And having interacted with many traders over the years, the ones who have stayed in the game do sort of share those attributes as well. So some of the adaptations to volatility, well, we've seen unprecedented volatility at the moment. I mean, I'm going to go through charts a little bit later to show you. I mean, some of the markets I like to trade the Dow Jones Industrial Average, one of my favorite markets to trade. And to see something like this occur is absolutely phenomenal. And just records in terms of volatility, in terms of the market losses, in terms of the Dow has been closed on its limit down, I think 5 or 6 times, where if it loses too many points or a percentage, should I say, in a day's trading, it's closed. I believe that was a measure put in at 2010 after the flash crash. Never seen it before. Happened several days in a row. And we've seen the Dow open 1,000 points down and then lose another 1,000 points, and I find it hard for my brain to process that. Everything I've learned previously makes me not think I can short the Dow after it's been down 1,000 points. And conversely, if it goes up, it opened up, it was last Monday, wasn't it? It opened up 900 points and did another 700 points. Again, these are the adaptations. It's sort of recognizing this new reality. Okay, in April, the volatility has come down a little bit, but it's still absolutely crazy. I mean, to give us a sense of perspective, if I just go onto a monthly time frame, this was just get a few more units. Now, these are all monthly candlesticks. I mean, from the subprime mortgage crisis, I'm going to just use a fib to illustrate this. We nearly lost 50% of our gains. That's the low of the subprime mortgage crisis when Obama took over. We nearly lost 50%. And I'm going to give you a little bit of a sad story here. We wanted to get long at that 50%, and it missed our trade by about 100 points. That would have been the trade of my career. But these things happen in trading, don't they? That was an order we missed, unfortunately. I'd love to be able to tell you I got on board with that, but I didn't. But just across all asset classes at the moment, it's just incredible. I'm not going to go for everything, but one asset class that is catching people out at the moment that I'm finding is oil, because there's a lot of people who've come to us recently and said, I'm long at oil from $45 a barrel, I've still got the position open, $40, etc., etc., because people can't comprehend that oil can be down around $28 at the moment, and it's fallen even to 25. And a lot of people are getting very hard, quick lessons that you shouldn't really have too many expectations in trading. Practically, if your mindset is that anything can happen, then anything can happen. And there's nothing wrong trying to get long on oil as a speculative trade, but as long as you manage your risk and you're willing to take a loss. But there's a lot of people in some very awful situations on oil. It seems to be a common theme. It may be a bit of people I've been interacting with recently, but oil seems to be the one that's catching people out. They're obsessed with trying to bottom pick it. Yes, I am eventually going to be bullish on oil when demand increases again, but I'm patient. I don't need to try and pick the bottom. I'm quite happy to wait for it to show me a setup to get long on it. I don't get the fear of missing out of oil. It's not a problem for me. Different strategies maybe work at the moment. I love reversal trading. I love catching bottoms of stock markets because stock markets go up more than they go down. So fading major support and resistance levels. March made it very clear that wasn't a strategy that was going to work. I like scalping on a 5-minute time frame. March made it very clear that wasn't going to work. So it was a case of quickly thinking, right, I don't want to trade these strategies. I'm going to look for other patterns. I'm going to change up, go to higher time frames as well. Different routines as well. This goes to slightly more external factors as well. I know people who sit at a chart from 8 a.m. in the morning till 9 o'clock at night. And with the amount of volatility at the moment, that may introduce burnout. So maybe introducing some more interventions, going out for exercise, going out to walk the dog, maybe doing smaller sessions at the moment, maybe just trading one of either the European or the US sessions, whatever an individual's tolerance is. So that adaptation and routine, I think, has been quite important. And of course, the question is, there more to come? The markets don't like uncertainty, and there still is some uncertainty. And I think a quick tip from my point of view is a lot of people do get too focused on news. I've got people saying, well, again, I think when you try and apply the regular logic that applies in life to the markets, it doesn't necessarily work. We all know if we get good news, the market can go down. If we get bad news, the market can go up. And I come across as quite flippant with news. I don't really care about news and trying to interpret it. You can make a fantastically coherent, intelligent case for why the markets may go up during the coronavirus. You could do the opposite for why the market may go down and sound convincing. You can find any array of experts to support your view. I don't worry about that. It all comes down to what is in my decision-making criteria. An exercise I get traders to do when I mentor them is I say to them, can you write down what goes into your decision-making pot in order for you to take a trade? And I would like a trader to get to the point where they can just go bang, 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 and bullet point that down. But so many traders don't. They pick and choose what they make the decisions. They might read a tweet by so-and-so. They might try and read the Federal Reserve notes. They might try and preempt the unemployment figures that are coming out in just over an hour's time, and just pick and choose. And trading's about consistency. So for me, it's just simplifying things and just making decisions on, really basic things.
Simon,
yes.
Just on that last slide, you mentioned the different routines. Obviously, the lockdown is forcing everybody in, and are you seeing more people trading more sort of at risk of over trading, maybe in your live trading room? Or is that something that people should be aware of?
Yeah, I'm actually going to cover that in the risk slide, but yeah, certainly, when we talk about the risks in a moment, overtrading is one of the ones. That's very well spotted. That is the big risk at the moment. Is sort of what are the usual risks with trading, and how is this current sort of context sort of putting more temptations on? Yeah, I'm going to go into details on those on the risk slide shortly. But
this is the routines. Thanks. This is great. Thank you. I'm enjoying this. I take it this is everybody else is. Just let us know if this is making sense to you. Certainly, I'm appreciating this, so I'm enjoying the presentation. Fab, says Rob. I know, Rob, you're going to have to leave. You can catch up on the recording. Marguerite, Gordon, great. Okay, so thank you, Simon. We'll let you carry on. Sorry for interrupting.
That's no problem. Thank you very much. So what are some of the opportunities at the moment? Because there's always two sides of a coin. With volatility, there's the opportunity and there's the risk. Well, big moves can equal big profits. We know that. If you're seeing the Dow move 1,000 points, 2,000 points, and you manage to get on the back of that, then you can make some serious profits from the market. And the same with anything. If my business, my trading partner, should I say, and business partner, who specializes in the European session, he was shorting the DAX all of last month. Now, I'm going to level you. I'm not great at shorting stock markets because my brain's programmed to think they always go up. So Michael sort of carries the short baton, if you like. He's more pessimistic than me, whereas I'm more optimistic as a bit of a bull. And he was just nailing that left, right, and center. So if you can catch these big moves and get with a sentiment, then you can really make some good cash of it. So all the markets are really moving at the moment to those sort of main asset classes, whether you like commodities, indices, FX, crypto, anything like that. All the markets are moving at the moment. So that presents opportunities, whether it's a market that you're interested in or whether it's a new market to explore that you've never traded before. So yeah, there's plenty of opportunities, and that's I've already put 3 here. Unfortunately, the risk list is slightly larger. So the risk of not understanding leverage. I have people who don't understand leverage. They don't do a basic calculation. The basic calculation is your risk. So you want to risk £1,000 or whatever figure it is, divided by your stop equals your leverage, whether that's spread betting pounds a point or it's CFD contracts. A lot of people, in my experience, think of themselves as an X trader. I'm a £5 a point trader on the DAX. I'm a £6. I'm a 2-lot trader on cable. And that's got no business in this type of environment, because the moves are that large at the moment. You really need to bring your leverage down and your stops out to fit in with the patterns and for what's working for us. So people over leveraging is a big issue, and that just starts a whole sort of domino effect of trouble. Psychological stresses. We all know, anyone who's experienced will know that psychology is the biggest. If you were here last week, which I was, and listened to Steve Ward, someone who I've got a great deal of respect for, Steve Ward was talking about hooking people up to biomonitors and monitoring their sleep and stress patterns and things like that. That's the level of that professional traders will go to. And those psychological stresses are hard enough in trading, but they're also enhanced in this environment. And it's not just the intrinsic stresses of trading, volatility, over trading, over leveraging. It's also externally as well. What are your own circumstances? Are you worried about your job? Are you worried about the economy? Are you worried about catching the virus? Do you have relatives who are vulnerable? Have you got kids running around who should be usually at school? And has it disrupted your routine? So you've also, depending on your own circumstances, got those external stresses that can influence your trading. Not getting enough sleep, not getting exercise because you may be locked in a country that isn't even allowing that. Not eating correctly because it's harder to get good food. This stuff can all have an impact on your trading as well. Getting overexcited, which is essentially over trading, and I can spot these people from a mile away. Get people sign up for a trade room, something like that, and they're literally emailing us in a split second. Let me in. I know they're excited about getting trading, but I can see people who are over trading, who are likely to be susceptible for over trading, and can't pull themselves away from the screen. Now, very rarely in trading do you get a sort of AB eureka moment. I remember early, probably 2008-9, when I started. I remember taking a trade in the morning. I can't remember if it was a win or a lose, it doesn't matter. And then running to the gym afterwards, sort of midday when there's lower volumes. And that was the first time that I never thought I'm missing out or wanted to be at the screens. And I think you very rarely get those sort of AB moments where you get that great contrast. That's the only one in my trading career I can remember where one day it was just like a snap. I didn't really get overexcited. I didn't feel like I needed to be at the screens. And yeah, over trading, massive risk at the moment, because you can just sense the opportunity. And the thing is with trading, because it's such a simple representation of opportunity, it's like, well, the Dow's moved or cable's moved 200 pips. If I'd have traded that X, Y, and Z, then you could have done it. And even worse, if you think a move's going to happen, it does happen and you don't trade it, then there's all those temptations. I'm trying not to get too far down the psychological rabbit hole today. I'm trying to focus on strategies and stuff, but I'm a big believer in working on trading psychology. Hesitating in taking losses, you can sometimes get away with that. If you hesitate in this current market, particularly if you're at leverage, it's going to cause you some serious harm. I mean, I remember being sat there in the middle of March and seeing the Federal Reserve do their first round of interventions and seeing the Dow Jones go up 600 points in a minute. And I was just like, I had to do a double take at the candle. Even on an hourly candle, it just looked incredible. And I measured it 600 points, obviously found out what the news was. And it's like, well, I'm glad I'm not on the wrong side of that, because I would never get filled by my broker for a loss probably. So, you know, just unprecedented, just like mini black swans amongst the giant black swan all the time. Sort of not having new expectations and beliefs, and this is, you know, me sort of giving an example from my point of view, is seeing the DAX, you just shed points. We've seen bull, you know, under Trump, regardless of what you think about him, we've pretty much seen bull markets. 2018 was quite bumpy. 2017 was pretty much straight up. You know, we've had, you know, the US has been making new all-time highs for fun on a regular basis. The DAX did. The FTSE's lagging behind a little bit. And then you have to change your expectations and belief around what the market can do. And it ties into that oil example earlier. You have to, you know, change your expectations that oil can be down there, and change your beliefs that the market can do stuff. This is a fantastic time to learn, because as Simon said before the presentation, we may not ever see anything like this again in our lifetime. So if you can experience this and go through it and come out the other side, your beliefs and expectations about what the market can do are probably going to be so in line with what the market will ever do again in your trading career. This is a fantastic opportunity in that respect. Again, people not adapting is a bit of a risk at the moment. Minimum trade size could be an issue with your broker as well. If you've only got a small account and the broker only allows you to trade at X lots or X pounds a point, then that can be a bit of an issue as well. And we work with a broker who's made us some mini contracts for our members so they can trade at a penny a point if they need to. You know, because I mean, we've been putting huge stops in, 600-700 point stops again on the Dow Jones Industrial Average, which I've never done before. And if you can only trade that at 50p a point, you need a pretty large account to keep your risk within reasonable tolerances of 1 or 2% or whatever you would define as reasonable. So summary so far then, I've talked about sort of the volatility, a bit of a demonstration, spoken about some of the opportunities and risks. We're going to get to the more fun stuff now and talk about the actual trading. Like I say, I'm much more interested in being a practitioner than a theorist. So there's a big trading paradox here that people don't focus on, and hindsight education doesn't capture this, because it says to you, well, here's a trading pattern. You could have traded this if you'd gone short or long there. Well, yeah, I know what I could have done after it's happened, but we have to start off at a place of uncertainty. If we're getting into a trade, we're starting off at a place of uncertainty, and that's very, very difficult to deal with. Let me just try and zoom into a cable trade that we have on at the moment, and I'll show you how this looked at the time when it was recorded. But you know, we're long on cable back here from just under 1.2. But you know, once this trade's executed, I've got to trade into the unknown, into the future. You know, it's no good me saying this and saying, oh, look at this belter of a trade. We got long here. It was obvious it was going to break up. It wasn't. It was obvious it was going to break up. We've made 600 pips. Fantastic. You know, I'll say, of course, it shows you how to do that. That doesn't help you. What helps you is seeing how we prepare for it and how we trade it at the time. And as I say, I'm going to show you some recordings of some live trade sessions in a moment to sort of illustrate this point. But that's what I'm talking about with trading. We go from complete uncertainty, not knowing what's going to happen once we place a trade, to complete certainty as time goes on. And of course, once we exit the trade, we're then certain about what would have happened if we'd managed it differently. And there's so many psychological and stressful implications between these two states that it's unbelievable. And this is why I focus on it so much, because it's so important to be able to accept uncertainty and be able to let go of any control you've got of the market. And people don't do that. People want to control the market. They want this, they crave the certainty. We're used to it. We don't like psychological voids. We don't like not knowing, and letting go of that and just saying, right, here's my entry, here's my limit, here's my stop, here's my management plan. Do what you want, market. I'm a passenger. It sounds simple, but it is extremely hard in practice. I'm sure any of you who've taken trades will know. So let's look at some of the trades that we've taken recently to emphasize some of these points. Now, let me just give me one moment to pull. These are some of my recent YouTube sessions. We actually use GoToWebinar as well. So you're almost practically in the live room. We display our charts here. There's me not looking at the charts there. I'm going to talk you through a few different trades. I'm going to show you how they turned out as well. So it's a case of trading into uncertainty. So the first trade I'm going to show you is a losing trade. Now, it'll be very tempting for me just to show you winners, but the reality of trading is if you can't take a loss, you'll not be a successful trader. So this day is actually interesting. This is Wednesday, 25th of last month. There were 3 trades here. So DAX comes up, starts wedging towards the high, ends up breaking out long. So we've taken a long here. It's 9660. We've got a stop down at 9450 originally. Now, if I move on to the DAX chart, we can have a look at how that trade played out. So the DAX actually comes up, the US Open flush fakes out. I actually took a half-hour loss down here, and the market came down, didn't hit the stop loss, went up, and would have been a nice winning trade. So it's a losing trade. It's with half-hour loss. My decision was to get out of this trade down here, and then it went up. It would have been a winner. You know, that's fine. That's my decision. I need to review that. If I'd left the trade passively and not moved the stop, then it would have ended up being a winning trade. That's fine. It's a loss through my risk tolerance. No problem with that. Now, one of the practical issues that traders have is they would let that trade bleed into their future trades. We're designed to associate one trade with the next, when statistically each trade is independent. So if I'd not put that DAX to one side, that's a losing trade. I'll review that trade when the market's closed. I'll do my weekend review on that trade. I wouldn't have seen this next opportunity. This is the same. Or these next two opportunities. This is the same trading session. So this is me placing the cable long that I just showed you a moment ago. For me, you know, the pound was ridiculously undervalued down here at 114. The market had come up on a previous support level and wedged onto it twice. We're seeing higher lows, seeing the market wedge. Just a quick tip, these support and resistance become support levels are working fabulously at the moment. Most of our trades are based around there. So again, I place this order on the chart. I don't know what's going to happen. The market might just go straight into my stop loss. You know, I might think, oh, I'm more likely to get a loser because I'm associating it with losing DAX trade, but that's not what happens. You've just got to crack on and put the next trade in. And then if we move on to have a look at the cable chart, let me just grab that a second. We can see it turned out to be a pretty nice trade. The market broke up, ended up, we use a traffic light system in our trade room. We use orange for entry, red for stops, and green for profit targets. This actually has two trades on. It's got a trade on from yesterday as well, so it can look a bit convoluted. And we use blue for a summary, and then we update our stop moves, our profit taking moves, and time and date stamp those. So that moved up very nicely. That trade's still running with 25% on it. It's a nice swing trade. Just out of interest, we also had a trade on cable yesterday where we got long, nearly got stopped out there. Then it came up, hit our first profit target, and it's come down to stop us at break even. So we've still got one trade on cable at the moment. I mean, that was from then. And the third trade that I took that day, I hope that everyone's able to stay with me here. Let me just find the next one.
Yeah, we're working, Simon. This is great. Is it all currencies you trade, or what? Just to give us an idea of what you trade in the room.
We trade, yeah, basically everything that's on screen and a couple of others. We look at the four indices. We look at the FTSE, the DAX, the Dow Jones, and the S&P 500. Then we look at euro dollar, cable, and euro pound as well. We also look at gold and oil. I don't like doing currencies that are outside of sort of our time zone, if you like. So those several markets give us plenty of opportunity. To be fair, if I only had to trade the DAX and Dow, I think that'd be more than enough for me. But you know, there's obviously more markets. But yeah, indices, the major pairs, and then a couple of commodities. Yeah, so this was the final trade place that day. And again, I just want to emphasize this: the DAX loss could have influenced the trading session. Now, again, this looks like the Dow's running into a level here. And sometimes with reversal trading, you want to see the market hit the level quickly. You know, you want to stand. The saying is you want to stand in front of a train. So you can see here how this is an hourly candle. Let me just get onto the right one. It comes into the level, hits it very, very precisely, hits the level very, very precisely, and bounces out. And you can see I'm doing stop management already on the trade as we get the reaction. So this is the type of price action I want to see at the moment. I want to see major support and resistance levels. And I want to see the market very, very technical. I mean, look how this comes and downs and hits. You know, you wouldn't believe me if I didn't show you this at the time, but that's how good the market can be. And that's not because of that, you know, that's just one of those lovely little moves that we've had. And how did that play out? Well, that's been the trade. That's been the trade of probably the year, to be fair. So that trade was here. That's that candle as it evolved in the hourly time frame. The candle you've just seen on screen, you can see there, that was based on, again, I'm telling you, this support and resistance. Big resistance level, market breaks up, big support level, runs off. Classic pattern in stock trading. You know, market was falling down several hundred points, quite happy to stand in the way of it, get a stop in, be happy with the potential trade outcomes. And, you know, once you've got on board of some big moves, you know, first profit target 1,000 points, second profit target 1,800 points. The positive stop got stopped out at 21,700. So, you know, that just shows that how you can, find these lovely little moves in the market at the moment. We always scale out as well, if anyone's curious about that. That allows you to obviously run a portion of your trade for a potential swing trade, but also allows you to bank profit. We always recommend people scale out. So that was another nice trade. Just got a couple more to show you, just to emphasize some of the strategies we're using at the moment. We'll move on to the next one. This one's a really nice example on euro pound, actually, and again, it's about standing in the way of a market and reversal trading. I love reversal trading, and not catching falling knives. I love reversal trading. If it's not about trying to find a bottom. Again, oil, not at the moment for me. There's no bottom picking, but these sort of currency pairs and the indices that volatile and that moving that well at the moment, it's ideal. Let me just find that correct pair. One moment. Euro pound, I've got a large list at the side of me. Oh, that's a picture from earlier. My high quality graphics creation, as you can see. So this one was taken on a daily time frame. Now this was based on two factors. This was based on a Fibonacci retracement down from the low, 100%, up to the high of the recent swing, and then the 61.8 Fibonacci is a big Fibonacci for me. Again, look at the consistency here. We have big resistance level. We anticipate the big resistance level will become a support level. Also have the 61.8, also had a 59 moving average underneath it, also had S3 daily pivot underneath it. Lots of layers of confluence. I felt this was a high probability trade, but again, it's about having that nerve, having that confidence to be able to stand in the way of a falling market when you need to. And this looks very bearish. The question I tell traders as a quick tip is, when you're analyzing a level, when you're analyzing a trade, take the other side. If I want to get long here, I want to get long here, play devil's advocate with yourself. The question I would say to myself is, do I want to get short at that level on the first test? Because I want to get long. Do I want to, at this orange line, get short? And if the answer is absolutely not, then that's probably helping you make a case for a long trade. If the answer is, yeah, a short looks as good as a long, then that's maybe an indication it's not a trade that you want to be taking. So I always encourage these devil's advocate questions. And of course, you're seeing some strong momentum to the downside. It's obviously a clear downtrend. If you are a reversal trader, just get your order in, have confidence in your levels, have confidence in your strategies. And again, it certainly wasn't the biggest trade we've ever had, but it worked out. We scaled out up here for I think it was 50 or 75%. Then it came down and took a stop break even. So it wasn't a big swing trade, but scaling out banks you some profit. We don't get greedy and expect a huge move. We take off a portion of our trade, and then that allows us the opportunity to run a bigger trade, but it also means if it comes back down, we've banked some profit. And I think I possibly have one more. Yeah, I've got one more on a Dow on a quick 5 minute time frame here. So this was a frustrating week, actually, and I'll just show you why and how you've got to demonstrate patience. I'm trying to demonstrate the right trading behaviors here. That's another Dow trade that we're currently in. So Monday the 6th, so over the weekend between Friday the 3rd and Monday the 6th, I was bullish on the stock markets. I wanted to get long, and this is, I gave this example earlier. The Dow opened 900 odd points in its first, gapped up 900 points. Now my brain, we're talking about adaptation and beliefs, can't buy a 900 point market. I still can't do it because I've never seen, it's just crazy. And of course it went up another 670 points. The temptation is to get the fear of missing out. The temptation is to chase the market. You would have been okay in these circumstances, but it's reinforcing a bad trading behavior. Okay, so Tuesday, what I wanted were these resistance levels to hold. I was wanting to be able to take a break of those resistance levels. Tuesday gapped up another 700 points. So I've been bullish, and I spoke about how annoying it is when you think a move's going to happen and you can't find a way to get on board with it. That can really tempt you to make trading errors. The market gapped up another, sort of 700, 800 points. Very frustrating. Fortunately, the DAX gave us an indication that the markets were going to go down, and we're able to trade a short on the 5 minute time frame. Here's how it looked. The DAX actually went before, and again, this is about where's my pen gone? It's disappeared. Anyway, the bottom left, you can see the DAX already broke out of its sideways range, and then we're just waiting for the Dow to do the same. So we set a short order on a Dow. We put our stop loss in validation. The question I always ask people, common sense, practical question for stop losses is where do you not want the market to go? Stop loss placement's a bit of an art. Where don't you want the market to go, and how many things can you put in the way of your entry to your stop. You know, here we've got the round number, here we've got the daily pivot, here we've got the high of the day, excluding the first 5-minute candle. So we've got 3 things in between our entry and stop. Conversely, you want as few things in between your profit target and entry. Of course, it's not always possible, but that's the way it goes. You know, we move further on this trade, we can see how it works out quite nicely, and like by pure coincidence, I managed to take profit right at the bottom of the move there at 23,112. So that was just a nice little 5-minute time frame trade we had to come down to because the hourly stuff wasn't working for us. But the point about that trade is not the fact that it's a nice winning trade, it's the fact that just because Monday and Tuesday didn't do what I recognize as an opportunity, you know, I was bullish from the weekend, I was looking forward to getting stuck into some longs, you know, just because I, you know, didn't get what I wanted, I didn't let it affect my mindset, I was still disciplined in my trading, and I waited for the right opportunity. And just to see how that one played out, again, that was just a little bit of a scalp. I need to come on a 5-minute time frame here. Quick tip, take screenshot, mark up your charts, take screenshots, so then put them in a folder. So that trade, that literally just by pure luck picked the bottom. And I think the final trade I had, Tuesday was wonderful last week. It pulled back for us, and then because I was patient and disciplined, I felt like I almost got rewarded by the market. This is the last video I'm going to show you, or is it? No, actually, no, I beg your pardon, I don't have this one recorded. But I was patient with the market. We found, if we come onto a 5-minute time frame, we can find the finesse and timing that finished up this last Dow trade. This level was of interest for me here, this high of the 1430 candle, the high of Wednesday. I was looking for it to set up and break. Again, classic breakout behavior. I would love to know, oh, there's my pen. It was just hiding from me. I've got multiple desktop screens. So that high there, market comes down, comes up, retests the level. So we get a bit of an elastic band effect, bounce off the level. Nice retracement usually equals a nice restriction. Bang, we get long on the market. Finally, on the 8th, which was the Wednesday, after trying to get long all week, I managed to get long, and that's a trade that is still open at the moment. We've taken profit up here, taken profit up there. Stop's currently at break even because you have to give the swing trades a bit of room. The Dow's in a bit of a sideways period at the moment. But if you want to get on these big trades, you do have to give them room to breathe. I mean, we only have 25% of that trade running, but you know, that's where we are on that trade at the moment. So the open positions we have are those. That is that Dow Jones trade that I've literally just shown you. We'll see how that goes, and it's also the longer term swing trade on cable as well. So you're always in a different phase of trading, aren't you? You know, you're in a monitoring phase, you're in an opportunity phase, you're in an execution phase, you're in a management phase, and then an exit phase, and then you sort of have a review phase as well. So on every different market, you're always in sort of a different phase of the cycle. And at the moment, we're in the management phase on cable. If it comes down, we'll be in the exiting and review stage. And then, but at the same time, we're still in the monitoring opportunity phase. If there's a new trade to take on cable, we will do. So it's this continuous objective step process that you're trying to apply every single time in that respect. And yeah, that's pretty much me done. I can rant if there's lots of questions. I can certainly rant about lots of other things and have a conversation with you, Simon. But
absolutely, no, terrific. Yeah. Sorry, you were going to mention the trial, of course.
I was, yeah. And what we do is, if you want, because of this coronavirus period at the moment, if you want to come in our trade room for 14 days for free, you don't have to enter credit card details or anything like that. It's literally name, last name, email address. I'm not going to try and upsell you an expensive course or anything like that. We do 20 live sessions over that 14-day period. There's Michael in the morning, there's me in the afternoon. We have a chat room as well. It's GoToWebinar, exactly like you're in now. We do have a chat room so you can interact with our trading community. It's a case of just trying to take some live trades, discuss the context, discuss the emotions, people sharing trading ideas, trading journey, and just trying to, as a collective, improve ourselves as traders. I mean, like I say, my view of trading is I've got to have skin in the game. I've got to show you that I can take trades, and I think, you know, going from that uncertainty to certainty is by far the best way to learn how to trade. You know, driving the car rather than just doing a theory test, so to speak.
It's a good analogy. That link, guys, is in the chat box there. I've just posted that link, so if you can just use that. And again, Simon, it's been it's been a privilege to meet you again, from meeting Michael at the trade show in February, just the end of February. It feels like a year ago. Everything's changed so much in 6 weeks.
It's crazy, isn't it?
It's good to be. Listen, the whole team, yourself, James, and Michael. It's been very easy to get to know, to work with you. Very efficient and transparent, and I guess that would give me confidence if I was coming into the trading room working with you guys as well. I think that's it comes across as your approach. It's pretty much no nonsense. See it as it is and trade what you're seeing. This is I think what will people in here will appreciate that. So go and please take up that offer for the 2-week trial. Never a better time for a 2-week trial in a live trading room as there is now. So let's get back to some of the questions. If we can, we've just got another 5 or 6 minutes to look at that. Pete, well, listen, let's go back to Bob first of all. Does Simon think the UK would ever ban short trades like some of the European countries have done today? Yes, I mean, I think most of them have extended the ban that they placed in March. What do you think about banning short trades?
I mean, I think if we haven't so far, we won't do. I mean, I think short trading keeps the market honest, doesn't it? I think it's important. I mean, I don't mind, contingencies like the US has, where it has a limit down and closes the market to review it. But short trading keeps pricing honest. It keeps traders honest, and it's important for market balance. I don't think the UK would. I think if it was going to happen, it would have happened now. And this, I could be wrong, but I would have thought we've probably seen the back end of the greatest volatility last month. I could be completely wrong, and I may get my expectations changed, but I think it's an improbable event.
Yeah, it's an extreme measure. We've got Antonio from Fineco Bank following. We might ask him the perspective from the European banks there. Pete says, does Simon feel that the Dow generally follows the DAX?
Yeah, absolutely. I think the DAX follows the Dow. I think they all follow the S&P. The S&P is the big boy, isn't it? But yes, they're absolutely correlated to a degree. I mean, what we've seen is the Dow make all-time highs for fun compared to the DAX. But you look at a Dow chart and a monthly chart, it's just gone up and up and up and up and up. But they certainly are correlated, not as much as they have been. I mean, the FTSE hasn't made all-time highs since I think 2018, but the DAX hasn't trended quite as strong, has it? It's taken a while to get up to its all-time highs, and it just does it, and then we get this. But no, I mean, it's the old America sneezes, the rest of the world catches a cold, doesn't it? So very much for me, particularly when there's EU-US overlap in the afternoon sessions that I specialize in, certainly the US is the daddy. The S&P is the big one, and then it's the Dow, and then generally speaking, I think the European markets do generally sort of have a look at those. The only thing I would just say is sometimes there have been some risk off European closes into 4:30 UK time, and then the Dow has rallied like we saw yesterday. But yeah, they're certainly correlated, but I would say the DAX follows the Dow more than the other way around.
Fantastic, thanks. Margaret says, what is the the BO/B? Did I miss this? Does that?
But that's a breakout B. That would be a retest of previous resistance. So yeah, very briefly, let me just show that on the chart. I'll put euro pound for that. It doesn't say it on this chart, but so a breakout A for us is where the market breaks out, a breakout of a level. A breakout B is when it retests. So I call that an A. I call that a B. This would be a breakout B. So that's what BOB means. Apologies for not explaining the specific strategy names, but that's what I mean by that. When it breaks out of a level, it's an A. When it comes to retest it, it's a B. So you can trade either one of those.
Fantastic, thank you. Let's keep going through. We've got great questions coming in. Thanks for that. Let's go. Deepal, does the trade room keep records of all trades taken?
Yes, we do. We do keep records. We generally keep them on a chart and things like that. But yeah, we keep records of our trades taken for review and analysis. And the copy trader I do is on the copy trading. I've not spoken about it today, but the copy trading connection that we use shows and records all the trades as well. So yeah, it's transparent. We tend to keep them on the charts as well and review them and things like that, and send out summaries and other things as well. But again, you're only as good as your next trade. So we're more interested in the future rather than the past. Just because we perform well one month doesn't mean we're going to do the next month. It's all about consistency and keeping those executions solid.
True. Douglas says, can we have the link to the 2-week trial? Douglas, I've posted that back to you, and guys, I'll put it in the chat box there again for you. Gordon, hi. FTSE's more linked to the pound strength. Is that?
Yeah, absolutely. Yeah, absolutely. I mean, you know, if we have because obviously a lot of the companies reporting dollars in the FTSE, so yeah, absolutely. The correlation with the pound is certainly there. You see a stronger dollar or weaker dollar, and it directly affects the FTSE. Absolutely.
Peter says, do you just do indexes or do you do shares as well?
We don't do individual equities. What you tend to find is the spreads are a lot wider on individual equities, so it's not as efficient. It's much cheaper because if you're taking lots and lots of trades, those spreads add up over time. So if you're trading the DAX or the Dow, you know, on a 1.5 point spread, obviously you need a good execution as well. Then it's a lot cheaper than trading individual equities. And so no, we don't trade sectors equities. We do have discussions around longer term unleveraged investments, around, you know, talking about our pension portfolios, SIPs and things like that, but that's not something we directly trade. But we do still have those discussions when the markets are a bit more quiet.
Brilliant, thank you. Richard says, with small accounts, how can I, now you touched on this before, he says, with small accounts, how can I have a 600-point stop? Any way around this?
Yeah, good question. We work with a broker who's created as mini contracts, so the 100th the size of a usual CFD contract on indices, so you can trade them at a penny a point. So even if you've got a smaller account, say 500, £1,000, you can still trade with a large stop. That has been a practical problem. And that's the reason we went to the broker we work with and said, they made the contracts for the copy trading account, but I said, you know, can we let other people have these contracts as well? They said, yeah, no problem. So we have some bespoke contracts made with the broker we work with that allow people to trade at small size, because it is a problem for people who are beginning. They want to trade with small accounts, which is completely sensible, but then the difficulty is it can force them to over leverage and risk too much of their account, which is a non-starter. So you need to find a broker who makes small contracts. You're welcome to contact us and I can recommend one.
Okay, fantastic. Well, listen, Simon, that brings us rather neatly up to our 45-minute time limit, and thank you. And if there's any other questions, please do keep them coming in. I will forward them to Simon, and he can respond to you directly. Please do take up the offer for the 2-week trial. I think it'll be a good experience. The trial, Simon, does it start just as soon as you enter? Is it 2 weeks behind, or is there a date that it starts? Or?
No, literally, as soon as you enter, you put your name in, your email address, you get sent emails with access straight away. There may be a slight period where we need a webinar to resynchronization, but it's done before each session. We do 2 sessions a day, either 7:50 in the morning UK time for the European session, and then I come on at 14:20 in the afternoon and do the US session. But yeah, it starts straight away. And if you have any issues, we've got a live chat on our website that's the direct feed to us anyway, so we can resolve any technical issues pretty much instantaneously.
Okay, is this offer time limited? Andrew's saying.
I mean, it's certainly for the we anticipate it for the coronavirus period. I mean, I don't know how long we're going to do it for. I mean, generally speaking, if people want to come in and experience, I'll always back my own horse. So they're welcome to come in and watch us trade for a period. It's just the fact we've formalised it in a 2-week period. We don't have any plans to stop it at the moment. We're going to do it for the coronavirus period, but yeah. So whenever suits your individual circumstances, come along and see us.
Great. Well, listen, Simon Massey from TradeRoom Plus, thank you so much. That was a fantastic presentation. I've thoroughly enjoyed that, and you got through a lot of content. We saw some great charts there, and everything we see makes sense. So thank you for giving us the time today. I'm sure there'll be some of us will be going in to the
thank you for the opportunity to present.
Carry it on. My pleasure. What I'll do now, I'm going to take back the presenter role from you, and we're going to move along to Antonio at Fineco. So good feedback coming in from everybody as well, just to echo what I've just said there. So thank you very much again, and speak to you again soon. Now we are going to move straight along to our next presenter. We've got a not a full lesson this next, Antonio Dell'Anna from Fineco Bank. As you know, I've been doing lots of work in the last year to 18 months with Fineco Bank. They're an Italian bank. They offer full service accounts, brokerage, trading services, investment services and tools. We've been doing seminars in London. We've just started the webinar series with Adam Harris every fortnight for the next 3 months. We had our first one last night. So lots of things going on there. Antonio's coming in just for 10 minutes. He's going to talk about volatility again. We're going to stay with that theme of the volatile markets. and he's going to be showing us some of the tools that are out there, not just on the Fineco platform, but the wider markets as well, that can measure volatility and what you can do about that. Rajesh is just saying, is the recording? Yeah, Rajesh, we're recording this whole thing. You'll get it sent to you by email. But if you want to go by tomorrow, there will be a full replay on our website, roundtheclocktrader.com. So that's great. And by the way, if you go to the Round the Clock Trader video library, you can see recordings from all the webinars we've done for what seems like the beginning of time, but it's actually about 7 years. So let's go across now to our bring Antonio in, click a couple of buttons, and we should be there. So great to see you all here. Thanks for joining me for lunch. I hope you had lunch already. I've started to have my lunch early, in fact, on these days, because I don't get lunch. There we go. So Antonio, Dell'Anna, you should be able to hear me now.
Simon, yes, good afternoon.
Great.
Thank you very much for inviting me today. What an exciting afternoon for myself, and I guess for everyone in the audience. A lot of topics to discuss here.
A great start from Simon Massey. That was super. And Antonio, just saying that people will be familiar that we're working together with various projects. And I asked you to come in and sort of pop your head into this session and just to tell us a little about the volatility. So we'll go over to your screen in just a second. But on that last question about the shorting, the European countries have banned shorting. Do you have any thoughts on that?
Yes, so this is quite, I would say, regular action the regulator takes over Europe when the markets show volatility levels such as those we've seen in the last couple of months. To be honest, track records do not support the success of this action taken by the regulators. Indeed, the market have come down since the prohibition of short trades on the European markets have kicked in. However, as we can see, yesterday, for instance, the DAX was still going down. So those represents pure sales on the market. So not, as I said, not necessarily the action taken by the regulators has shown success in the past, and I would say even this time. Although some adjustment in terms of volatility of the markets we've seen, and I will show this in the couple of charts I have prepared on the topic for this afternoon.
Oh, terrific. Thanks for that. Let's go across then. I'll make you the presenter. You should see a prompt now to offer you to share your screen. Gordon's just asking, is it shorting on individual companies as well, or is it just the indices? I believe it's... No,
in fact, it's the other way around. Is on individual stocks, people are not allowed to short. And but the futures and the indices they can be traded regularly. In fact, in Italy, the prohibition is refers to any asset in the cash market, so stocks, ETF, and even certificates.
Okay. Oh, fantastic. Listen, well, we've just got little 10 minutes. It wasn't just a quick 10 minutes. It's good that you can be here. So shall we have a look at your screen, and I can see your screen. Because everybody just confirm that you also are looking at a volatility of the VIX index chart on Antonio's screen.
Yes, in fact,
we're all looking at the right screen, and we can hear you.
I definitely agree with Simon Massey, as mentioned at the beginning of his talk. Volatility has reached record levels. I've been in the financial industry for more than 15 years, and what I've seen recently is amazing. So just to give the whole audience some proportions of how volatility has moved in the US and in European markets, I have prepared one chart. This is the volatility index. This is from the CBOE. It's the option markets in the US, and has as underlying the 500 shares from the Standard & Poor's, the most important US index. And around the beginning of the year, the volatility was at values around 12, and it peaked just before the pandemic crisis was showing around at 25 or 26, and then we've seen picking it at levels over 80, and currently is moving in the area of 40, which is quite an interesting level still. So definitely it has shown slowing down, but it's still quite high, and it still represents an indicator of how the market is still looking for more space to go back into, say, the usual range. So I have prepared a similar chart for the European volatility index. This is the VSTOXX. The underlying of this index are the 50 more liquid stocks belonging to the Euro Stoxx index. They are mainly Central European and Central European shares. There are also Italian and Spanish shares inside. And also here we can see how the levels were around between 10 and 12, I would say, when they peaked by the end of February at levels just above 20 before the coronavirus crisis shocked the market. And then we can basically see a similar trends, and again here the values today are around 40. Funnily enough, I also prepared something on oil, which I definitely agree with Simon. Has been another asset, or I would say the main asset, which has shown an outstanding level of volatility, and this can be easily spotted on the chart I am showing at the moment from the size of the candles. So the candles around the end of last year and at the beginning of the year, they were very small, except this phase here, which was already showing some say complication, I would say, in terms of agreeing among OPEC and Russia regarding the cut on the production. But then we can identify a cross on the moving averages here, and then a clear downtrend. So once the oil has broken below this level, which is around 54 and a half, has broken down this level, and as it has tested it once again around the end of February, and then it's been going down, and we can see by the size of the candles that this downtrend was assuming massive proportions in terms of the speed. These are daily daily candles, so the speed of the downtrend was amazing. Now it's sort of the oil is sort of moving in a trading range between 20 and 29. And so I guess we have to follow up closely how it's moving around these levels to sort of identify the next trend. So obviously I'm not Simon, not giving any advice to the audience. I'm just sort of observing the markets like anyone is able to do. But I'm really excited about the level of the volatility, because this brings a lot of opportunity to the traders. And I've just shown the oil because it's perhaps the most representative example of this phase of the markets, but there is still a lot of other trading ideas they can take advantage of. In fact, for those of the audience who are looking for some education in trading, now they might opt for an approach such as the one Simon Massey and Trade Room Plus provided earlier, sort of copy trading approach, I understand. Or perhaps they can opt for a typical mentoring approach, such as the one Adam Harris masters and also shows in our 6-module webinars, according obviously to the audience level of trading. As much as they feel confident, they can choose one option or the other, or there are other approach still. However, I would say the most important for them is always being able to control their own risk aversion levels, and also perhaps identify a money management rule setup. So once they have identified those couple of things, entering a trade is an action they can make with a margin of higher confidence, and over time lead to consistent results. So I guess it's just about to choose their approach to trading, and their approach to being educated about it.
That's right, and that's actually what we're all about here, trying to present a varied selection of different educators and mentors and services so you can find the right partners to work with, the right companies to work with. I've just posted this link actually in the chat box.
Perfect.
Antonio, I think you
could just Simon, perfect. Yeah, we basically, on our website, we have a page which is reachable by clicking on this button, and it's the link Simon has just posted in the chat box. So there is first of all, there is the 6-module webinar we have organized and started yesterday with Simon and Adam Harris. There is a wider range of education opportunities, such as the one we have next week with Alpesh Patel. We've already started the preparation, and I can anticipate it's a very, very exciting program as well. And yeah, there we are.
So yeah, lots going on. Andre and Alistair has, I don't know if Alistair's in the room just now. He's just sent me an email. They're both asking about the replays for the part 1 of the Adam Harris event that we had last night. That I know is coming. I know you're working on that, so that will be going up on the website in that tab there, the video library.
Correct, precisely. Yeah, we will post it over here. There is already some education material. We will post the webinar we had last night and the future ones in this section of the website, so very easy to find.
Okay, Peter's saying couldn't get the first webinar to work, so just a few issues there. Peter, we'll try and make smooth that out for the next event. Maybe we'll start it earlier just to make sure that everybody's on in plenty time. Steven says
this is a fantastic advice, Simon. In fact, it's better people to come in like 10-15 minutes earlier, so if they have any issue with the audio or with the video, we can support. We're also actually planning to put some instructions in the emails we are sending out, so people already have a little kit to log in with more ease.
Great, fantastic. Okay, it's great feedback coming there. Gordon's in there, Stephen's he's already signed up for them all, which is great. I am going to have to say thank you, Antonio, for joining us. We've got another speaker that's waiting to get going, Adrian Slack. Gordon says, that's great. I'm in a different time zone. Yep, so that'll be great to be able to watch the replay. Margaret says, why were all the equities on the NASDAQ chart followed by a 0%? Margaret, let's not go back to the chart immediately because we're just going to get straight along to Adrian. So we'll see if we can get back to that another time. And Antonio, thanks for joining us. And I will speak to you again, obviously, throughout the days coming ahead. Looking forward to our next event with Alpesh on next Wednesday afternoon. So I'll speak to you very shortly. But thanks for coming in and joining us.
Simon, thank you very much, and thanks also to the audience for listening. Bye-bye.
Thank you very much, Antonio Dell'Anna, over there in Milan. We are going right ahead. This has been a good lunchtime event, and it's not over yet. We've still got Adrian Slack from the Intelligent Trading Academy, who's going to come and join us, and he is telling us about navigating trading the US market open. So not for the faint-hearted. Let's take the microphone off for Adrian and say good afternoon. Thank you for joining us. Are you there?
Yeah, hi Simon, can you hear me okay?
I can hear you fine, thank you. That's great. Just saying we're having a good day, and you again, we haven't had you on one of our round the clock trader events so far, so it's great to have you here. Again, we met very briefly at the trader show at the end of February.
We did.
Just interested to see what you're doing down there. The office is down in St Catherine's Dock in London. And I think the way that you're trading and approaching the markets will be interesting for everybody here. So shall we go across to your screens, and if you're ready to become the presenter. Just a little bit about, I know you come from a city background. You've worked with a lot of the big investment banks, Societe Generale.
Yeah, I do, Simon, and I did, and I will go through that. Can you see my Intelligent Trading Academy logo now?
I can see that fine. Can everybody else see and hear Adrian as well? Yep, great.
Yeah, we can all see that. Well, that's great. I've got a little presentation to do, and we will be jumping in and out of our trading platform, so I can show you what actually trades we've got on and things like that. But it's very important to obviously understand certain dynamics of the market at certain times. So if you're right with that, Simon, if you've got anything more to say, I'll just get cracking, and you can. Anyone
don't let me stand in the way. I'll just hand over to you entirely, and thank you.
Okay, you can jump in at any time. No worries. Okay, so thanks everybody, and I appreciate the opportunity that Simon's given to me. Any questions, you can just pop them down onto the chat as you've been doing. No problem. Navigating the markets. I've been around for quite some time, and I'll go into that a little bit in a minute. But we must prepare ourselves before entering any trade, and we can do this by aligning ourselves. I think, as the previous speaker said, finding an educator or an experienced professional, mentor, whatever you want to call us, to find some confidence. The financial markets are extremely volatile. That's been a theme of this session. So we need to be strict with our risk and trade management. I'm not here to show you fast cars or gold watches and things like that. I've been a trader for 30 years, and it's about a process, not about any promotion of any false lifestyle. So be prepared to put a little bit of work in yourself, understand the charts, understand a little bit about fundamental analysis, and hopefully you'll enjoy this session, and we'll appreciate any feedback either on the chat, or you can have my email, which is info@intelligenttradingacademy.com. So who are we? It's all right me spouting on about we've done this, we've done that. I've been a professional fund manager trader in my background. I set up ITA to really take on an education arena that's fraught with people mis-selling cars, lifestyle, showing you what you can have. We can all dream, but you have to put in some hard work and some graft. And one thing we know here is, I've been doing this for long enough, we know our terrain, we know what we're looking for, we know how to set up trades. So we'll do it in a very conservatively risk-managed basis, and hopefully I can show you what we do a little bit later. We talk to many people. We understand as well, especially during this period, which is very strange for us all, we want to give you the opportunity to join a community of professional traders. We have about 67 in London, 21 in Munich, and we're growing fairly rapidly. And typically, most educators will focus on 3 key areas: psychology, risk management, and the trading strategies. So hopefully, if you like what you see, we can get you up and running fairly swiftly. So this is me. Yeah, okay, so I airbrushed the picture a bit to make me look a bit better. Traded for about 25, 30 years. Very much taken an institutional approach. So I'm fundamentally trained. Was a market maker and FX trader for SocGen for 15 years. And I worked for Credit Suisse for 5 years. I'm trading Australasian stocks and shares. Member of the Society of Technical Analysts. I've worked in a few different centres. That's good for culture, good for me to understand how maybe some other traders look at the markets. I've always tried to be disciplined and consistent in my approach to trading, and we're very experienced in risk management, educating, and the trader mindset. So I very much look forward to having any questions that you might have. I am on LinkedIn, so you can check all their credentials there. So why do people trade? I mean, the majority of you, especially now, it's the great opportunity that, so we're not in our office. We're all trading from home because of this lockdown period here in the UK and majority globally. We can actually make money while we're sitting at home, but I say it's not easy. There is a process behind it, but you have to dedicate a bit of time each day to follow our process. I will show you a bit about our process and how we analyze the markets, but I want to go through some of the live charts as well, because obviously a little bit later on in New York will open, and we want to see if there's any particular setups that we can get involved in. It's good to learn new skills. It's good to manage our own money, and it's good to pat ourselves on the back when we do well. And we all beat ourselves up when it goes wrong, but if I'm giving you a strategy and a set of rules in the first instance to adhere to, hopefully that should take some of the anxiety of your psychology and mindset away. We're all doing it for, of course, some cash and some money. That's what trading's all about. So if we follow simple and structured trading strategies, we can adopt a methodical approach. Hopefully that will give you create some consistent returns, or at least some trading consistency and some idea of why you're entering a trade, because that's very important. We can risk manage. I don't tend to risk any more than 1% of my underlying pot. I don't use leverage. I'm not into that. It takes us a lot of hard sweat and work to get our money, so we don't want to give it away for leverage. And obviously we need to understand how to manage our mindset. We all have different tolerance to risk. We all have different ways of looking at things, so we've got to find some uniformity in that offering. So how a trader thinks: they look at their indicators, they look at their entries. There's lots of free education out there. There's a lot of signal groups you can join and things like that, but it doesn't really button down your education and your abilities, because we all look at the markets differently. We're all looking for the end result, the same as fundamental and technical analysis is always looking to predict a future price. But how we get there, technically and fundamentally, can be very different. But if you look at how a trader thinks, they concentrate on really their indicators and entries. They have a stop loss, that should be mandatory and standard for everybody. You place a stop at the time of entry. You've got an exit and trade a little bit of trade management. Really, the most important part is, I think, your risk management, your trade management, and your continuous learning, and having someone who's been there and done it, just to lean on it in times of when you're having drawdown. Because okay, so I've been in the markets for 30 years. I still have losing trades, and I'll show you some. The ones that are open, they won't be all winning, but hopefully I'll be in profit by the time I get to show you the charts. So we must really concentrate on that, really, the trade management, risk management, and continuous learning, because we're always learning and we're always striving to improve, and we can do that through education. Okay, we know what education is. We learn. It's a process of facilitated learning, acquisition of new skills, and we can do that at any time. So learn a new skill is key. To have a good coach and a mentor. Professional sportsmen and women, football teams, they don't just have 11 players and go out. There's a staff behind them. There's a team trying to get the best possible performance out of them, and that's what you should be trying to do in trading. Align yourself with the right people and the correct people. So being a technical analyst, albeit fundamentally trained, the fundamentals will examine earnings, dividends, economic pictures, macro, the bigger picture. Technical analysis is going to look at the charts, and here at ITA we use candlestick charting. We're very keen on trend and momentum, and I'll show you how we put those rules together a little bit later on in this presentation. There are three main principles of technical analysis. First one is market action discounts everything. So that's everything you see in your candle. And you know, I apologise if the terminology is a bit out there for some of the newer people there. But obviously our program that we run here will last for 6 months. So you have plenty of time to get to grips with everything. Prices move in trends. You've probably seen that through some other presenters, how prices are moving up trends and down trends. They can also move sideways. So you could have a range bound particular market. And when you're trading momentum in kind of range bound, because they're what they call laggard, because momentum and moving averages are laggard indicators, really the indicator or the trigger, an alert, will come halfway through. So we don't tend to trade the ranges. We like to trade it with the trend or the breaks and things like that. And history tends to repeat itself. So if it's done it before, it's highly likely to do it again. And I put usually there just because sometimes, you know, it's not 100% guaranteed. But you know, they're the three main principles of technical analysts if we're following that particular craft. We also look at algorithms. They're in our everyday cars, washing machines, and everything. Here at ITA, we can put an algorithm in place just where some moving averages might be crossing and things like that. But I mean, they're highly used globally all around the world. Here, I'm more like to use a semi-automated algorithm. You might see some buy and sell signals on my screen when I show you, but that's just for me on some of the just telling me that it's actually confirmed that this moving average is confirmed, it's cross, which could make us a nice entry. And I believe, you know, the last guy was speaking about oil. We have a buy stopping at the moment around the 2050 level, I think it is, just in case some of the momentum triggers that we look for get spiked out, because we are in an extreme volatile period for that particular asset. So when we look at candlestick charting, really a bullish candlestick is in green, so it will close higher than where it opens. That's what creates the body. Also, these are called tails or wicks, okay, and they look at the high and the low of that price, okay. The body of the candle is made up of where the actual instrument opened and closed. So if it's a bullish candle, it's going to be close higher than where it opened, so that creates the green graphic. If it's a bearish candle, it's going to close lower than where it opened, so that creates the red graphic and picture that you see. The high and low are still the same on the tail or wick, whatever you prefer to call them, because that is where the highest price of that day actually went, and that's where the lowest price of that particular asset went during that trading session, or whatever time frame you've got, because I typically like to enter trades on the H4, which is a 4-hour time frame. As well as maybe looking at a bigger picture on the weekly to see exactly where things are in their longer term trends. So by following a simple set of rules, we can pick better probability trade or higher probability trades. And one thing I'd always teach our traders and new people here is opportunity will come in all different shapes and sizes. Here we do a basic trend analysis, looking for higher probability trades on momentum shift, and at the bottom looking at the moving average convergence divergence. Ideally with the MACD, we want to be getting in at a newer particular cycle of a bullish or bearish positioning. And if that coincides nicely with price action breaking a trend or breaking through, you might see these little dots here. They're called parabolic SARs. You might have read them in books. SAR means stop and reverse. It's really a good momentum tool to switch where that particular asset is going. So we have to be structured, but if we follow some rules, our mindset is slightly better. And even if that's over a period of 6 months and we only do 5 or 6 trades, I would rather be a profitable trader than a busy fool. So we don't have to capture everything all of the time, and we don't think we have to have a trade on in every pair all of the time. So if we're strict with our rules, and if we're strict and conservative with our trade allocation, you'll be in a better profitable position. I might see 5-10 trades a day I want to get into, but I'll drill them down on probability and maybe do 2 or 3. So trade selection, trade entry is critically important. And if we can do that in the first instance by following some rules, I think most of the newer traders, or say even some of the experienced traders, will be in a better position. And it's always good to have a diverse pot or portfolio of trading strategies. This is just one of two that I would show you during your 6 months with ITA. So when we look at strategies, we try and create them simple and structured. They're tried and tested, so I've used them for many years. ITA has been going nearly for 3 years now, and yeah, making good traction. So we have offices in Manchester, London, and Munich. They are simple and structured. There's no reason to make them look really busy and complicated, because that would defeat the object of new people coming into trading. By creating systematic and a methodical approach, you should become more disciplined, which should create a little bit of consistency and patience in your trading. We all know when we set a trade up, in the first instance, it already goes into the minus. We haven't got to worry about that because the trade is based on a strategy, with a good, decent strike rate. Obviously, risk management is key. Don't overcommit your cash. Our stop loss, I like to call it our friend, as it helps preserve our capital and it will keep us trading for longer. Okay, and I'll be proactive in teaching you how to move your stops as the trade goes in our favor. Okay, and also by following a strategy should help remove the ambiguity of entering a trade and a little bit of your emotional ties. And remember, the market doesn't pick on us individually. It was here before we were born, and it'll be here well after as well, maybe in slightly different formats. But our psychology and mindset is key. Okay, we all think differently. We all have different opinions and beliefs, and especially in trading, it's going to be unlike anything many of you have done before. So managing your mindset, getting your method is totally the right thing to do. As I said, we'll all have different tolerance to risk, our behavior when in a trade, and maybe we have to determine what kind of trader you are. To be fair, at ITA, 90% of our delegates will work, so we have to give them something they can do during the day or in the evening. We send out an email at 9:30 every day with all our analysis on, as well as giving you access to our Pro Trader Skype group. And we'll have an offer for you today to join that free of charge for a period of time, so you can see what we do. And it's really what we should do. A lot of people talk about trading plans and things like that. Yes, a trading plan is great because it gives you the opportunity to just go back and see why you got into this in the first place. Give yourself goals and targets, but make them achievable. Yeah, don't try and it's nothing worse than giving yourself a target and you say you give yourself a target of 20% to make, and you've only made 15%, and you think that's bad. It's not. That is a great target. You should give things achievable and pat yourself on your back when you're successful. So keep focused on your trading plan, not on your emotions. When we look at our mindset, we could set up a strategy any time of the day, and we think looking at the strategy, once we've got the rules, it should only take up 10% of our kind of capacity. We look at 30% risk and money management. We proactively do that. We don't just set and forget our trades. We don't just risk 1% and just put 1% stop in for 1% reward. We make sure we move that stop as the price or the asset allows us, as and when, and that might be within a day, might be within 10 days. I'm not a scalper. We're kind of structured traders with structured analysis. We spend a bit of time, obviously, on your mindset, because your mindset, I'm thinking about this, you're thinking about that trade, when's the next trade, what's that? If we can kind of suppress that in the first few weeks with us, you'll be able to hopefully get to grips with what we're trying to show you. So by creating a discipline, we're hoping to see some consistency. With that consistency, we'll build some confidence. With confidence, you're more patient in your trading. Okay, and hopefully that will bring you to more profits and success. So it's a nice little graphic, just quite simply, to create a plan of how your route of your trading and how you're going to be hopefully get to some kind of discipline to give you a more solid chance and solid outcomes. There's many reasons why traders lose. In the first instance, a lot of people put in the wrong lot size and start doing things like that. So we have a lot size calculator that can help you with that to make sure you don't risk more than 1% of your underlying cash. But most people, they don't have any money management. They think they're right, so they start revenge trading. You know, they don't look at where the correct entry is, so they chase the market, they get it in at the wrong levels. They start breaking their own rules by not following their plans. They have no structure in place. They forget the strategy rules, and they start being a bit more discretionary ahead of time. And they let losses run and cut their winners quickly. It should be the other way around. We should be cutting our losses and letting our winners run. So that's the idea of the game, is to manage your losses, manage your capital, and obviously trade manage your winners. And if they're winning and going well, we need to protect that. So we move our stop into profit, just in case something happens, you know, while we're asleep. We can't watch the markets 24/7. We have to sleep and do stuff, and the stop loss will help us do that. But we also, if they are winning, why sell it? Why only make 1% when there's 3 or 4% on the table? That's a skill we all need to learn. So we can't control a price movement or the outcome of a trade. Okay, the price is going to do anything, and it will absorb all the FX transactions, all the throughout the day of its, you know, trillions of dollars that trades every day. And the outcome of a trade, we can set ourselves up, but we can't ultimately pick tops and bottoms. It doesn't happen like that. If we're banking profits, you know, our account is building. So that's the first thing we need to make sure that we're doing. We can control when we trade, when not to trade, what we're trading in. Here we trade FX indices and commodities, the standard stuff on MT4. We can actually decide when we bank our profit or when we get out for a loss. We can look for our risk. We can manage our psychology and mindset because we're using a strategy. We're managing, we know our worst case scenario because we're only risking 1% per trade. We can choose our tools, and we've done that for you. We've looked at, you know, I've looked at many kinds of different technical analysis, you know, Ichimoku, point and figure, GAN, Elliott wave, all those kind of things. And I always come back to more trend following and momentum based, and that's just what works for me. And you can control your development and learning. You know, the more you put in, the more you'll get out of it. And what I would say, the more people that communicate with us on a day-to-day basis, it will expedite your learning of this process, because it is a process. So our program is we'll give you lots of webinars. We do things like this. We do professional trading strategies. You get in-house sessions. We can do those remotely during this period. You do have access to pro traders. There's no sales team. It is us as traders. You know, it's my company, and I'm very passionate about giving people quality education. I have the credentials and the backstory. Worked at SocGen as an equity trader for many years and Credit Suisse. I should be on, when I was there, I should be on the FCA website if you want to check that out. I think we give the best value in trading education environment. I would say that's my company. We have a 6-month program. We have CPD accredited diplomas, so that's continued professional development. But we think we have real income opportunity through our mentorship, and you should, whatever fees you pay us, you should give yourself a period of time and as treat it as a business to make those fees back in your trading. And under our guidance, hopefully you will. Lots of without education, you limit and hinder your chances of success. Your brokers by FCA rules have to tell you, you know, the failure rate. Why be part of that? We don't own a broker. We can concentrate on the education and be part of the 22% that win, not the ones that fail. So there is a recipe for success by looking at the analysis, understanding the news and the economic picture, getting yourself some support, courses, mentors, indicators. Our Pro FX chat hopefully will give you that recipe for success. Many of our traders are making 5 to 15% return, and we do back our traders after a period of assessment. And we'll be looking at example P&Ls, things like that. I know time's running and I want to get to some charts, and I will do that very quickly. Here's some example of some closed trades that we had. You can see we're managing our risk here. Okay, and these are all April this year, March and April, recent ones here. And you can see we made some good money. Happy days, we can do that, and we'll hopefully continue to do that. There's plenty of advantages we can go through, but what I want to do is I just want to go talk a little bit about where our analysis and strategies are, because we can go back to our advantages fairly quickly. So here's some example strategies for you, and these can be used during market openings or during the trading day. And it's key that we do take credence to when markets opens, because obviously volume is slightly lower in the first half hour of trading. So we want to make sure we're prepared. And I said earlier, you must prepare to enter the market and have your trades ready when the market starts moving. So I'm going to concentrate on the fast track momentum, which is one of the ones that we set up here. And by identifying a select set of rules, we can take advantage of price action every day. I won't give you all the rules during this because obviously that's not fair. It's part of our package and part of the benefit of joining a top academy like ourselves. It's semi-automated, enhanced with manual analysis, and we can educate you as you progress with us. It's multi-asset class functionality, and that means FX, indices, and commodities. And also we use the daily H4 and the H1 time frame. So more busier trader, if you're sitting in front of the screens like most of us are now. A lot of our traders are working on the 1 hour time frame, but me, I typically work off the H4 and the daily. I just like to drill down, and I'll show you that in a sec, how I looked at the DAX recently. If we look at this chart here in CAD yen, we can spot some peaks and some troughs and things like that. But where's the kind of best trade to get into? I'd actually say we are in a downtrend, because there are some lower highs and peaks being created. But what trades do we look to get into? So if we overlay some simple rules, we can see we are in a nice downtrend. We've got a nice long moving average here, but we can trade these short-term trend breaks. And granted, that's not the greatest trend. Hats up, guilty to that. But what I do like is where the resistance at the 200-day EMA has kind of held, and we kind of get a break, and we get an area of where this the parabolic is shifted to negative, whilst this is relative figure, this is MACD, all turns negative. So we get an opportunity. And I'll repeat, opportunities come in different shapes and sizes. So again, a nice downtrend. We are trading with the trend, so we're selling in the downtrend. So added probability for a success rate. I like those kind of trades. Simply in the US 30 or the Dow Jones, we had some nice triggers here. We had a nice sell here while this happens, a buy here. And I like the reason, if the body of the candle closes above the 200-day moving average, I like to get in as long as momentum has turned bullish. Okay, we get another sell bearish trade there. So some simple rules there that everyone can follow and can be instructed on quite nicely. We do lots of trend trading. I'm just going to go back to, and I'm going to pop on our charts now, so hopefully everybody can see lots of noise binging on there. And what we have here is the German DAX, and the chart structure is quite nice. Looks really lovely, and we're seeing here our uptrend is now being tested. Whilst we've got negative momentum, but this is turned bullish, this is still negative. Okay, so we've run this trend for some time. Notice it's failing at the time of the 200-day moving average. Again, we tried to break, it's now failing. It's now just messing around and holding this trend. We pay more attention to the overall structure of the chart, okay, because we do not trade oscillators and confirmation indicators in isolation. We make the most, this is our most important structure of what we're looking at. And to me, if I look at something like this, let's have a quick look. We probably want to look at getting in just below this recent low or on that trend there, something like that. If that started to tick down and started to go mad, then we'd obviously get out of that particular trade. Okay, so we can run our longs, or we would look to go short at that period of time, and it's a good time to look at those markets. We'd also need to check out what's happening in other markets. You can see in the FTSE, similar kind of thing. The 200 days held is now broken down. This is positive, doesn't meet our rules just yet. So what we will do, wait for that to see where the price action is at the time. We might go to revisit that kind of trend, which is kind of a popular thing that assets tend to do, then fail. So we can be patient. We don't have to jump in at every opportunity. The opportunities will come to us, and we'll do that when we look. Okay, so we will monitor say for example, we had a long trade on in sterling New Zealand recently. Again, basically trading with the trend. Really, ideally, as a serious technical, any technical analyst is going to tell you wants 3 touches for the trend. Okay, there could have been some support here or a failed head and shoulders, really. So we know and we can see quite simply, we know there's a resistance at this area here. There's a spike there. I mean, that was adverse, so we will just ignore that. But we can see there's an issue here. So we're out of this trade. We actually got potential now. It's all rolling over on the 4-hour time frame to maybe slot down to support at the 200-day moving average again. Okay, but ideally, I want to trade with the trend. So even on this secondary trend break here, that's a good level for us because you can see that parabolic has reversed, now gone under. We've closed above the 200-day moving average. We've broken this trend line, and at the time of entry, we were getting this positive MACD here, and this was RVI was turning positive. This can be a bit more flaky, the RVI, but I just like it in the right direction of when we're going to be entering a trade. So some good examples there of what we could and would be looking for. We can also look at trend and manual trading. Okay, so we can put certain trends in, and it's a technique that's been around for many years. Michael Cavell is a well-known author and hosts lots of podcasts on this, very good to listen to. But we'll utilize technical and fundamental analysis to really establish the true nature of this. And it's used in all the multi-asset classes that are out there. So we'd look at market structure, chart patterns, what's the nature of the market, price action, multi-time frame analysis. We would obviously input as well. We'd look at some fundamental bits or whatever news was important at the time. We've got a little blueprint that we give out to our community. If anybody joins us, we'll happily give that out to you as well. So we risk manage 1% per trade on this, and the idea is to get to break even as soon as physically possible. So we like the way in an uptrend, if we get a fast impulsive move, you might get something, you might see this as a flag pattern, which is a corrective nature, and then it impulses out and will look something like this. Technically, you might have seen this online, but ideally flag poles and pennants are known as continuational patterns. So they want to be traded within a trend, that particular trend. I actually like flags at the bottom of particular cycles as well, because they can work quite nicely. During trends, I quite like flags and pennants as well, because I know they work quite neatly. We can look at ascending channels, descending channels. I don't want to go into too much about that, but we're looking for the high probability setups. So we can sell here on the H1 in dollar CAD recently. You can see there's a bearish flag here. There's I'm not sure that's too keen, but there's a bearish, there's an impulsive phase there, a corrective phase here, and lots of patterns kicking around. We are in a downtrend because there's lower highs being established, okay, kind of equaling out at this level here. But again, if we get in here and then we get in here, you could get a decent risk reward return on that particular pair, and it's in our wins, not our losses. If we're only risking 1% per trade, it's 21 trades I've got to lose to give all that back, okay? But we will be managing it effectively, and you'll see that. So throughout this session, we have 2 free opportunities for you. You're more than welcome to join our free Pro Trader Skype chat, and also book in a free 30-minute remote session with yours truly. And I'd happily go through, share our screens. We can do that through Zoom or Skype, whatever you want. You just obviously email us at info@intelligenttradingacademy.com, or just contact Simon, and I'm sure he'll pass your details on to us. So it's about learning the process. Please, when you want to start something new, we always have to work hard. The pro sportsmen and women, top people, they all do that. Understand our terrain. Make sure we prepare. Our analysis is preparing behind the scenes, so we know when the market's doing things, we're fully prepared. Okay, and just a few more slides to go. During your education, you'll get to understand and learn how to read the overall picture, and the idea to look at that is to get your own toolbox together. We must have our own tools that we want to, and we use confirmation indicators like I showed you. We can use parabolics, relative vigor. It's based on the opening and the closing over a 10-day period. We can use the MACD, looking for momentum that coincides nicely with a parabolic switch as well in direction. And also for overbought and oversold, most commentators will like, most educators will like relative strength. But again, that can be, you have to look in conjunction with the bigger picture of the chart for anything like that. You know, for example, just look at oil or the markets at that particular time. So when we do a trade setup, you know, I just have a thought process which is automatically ingrained into my brain. And thanks, Simon, for putting the address on there. And obviously, if you've got any questions after this webinar, you know, whack them over to me at the info address, and we'll come back to you. You can see, are we trading with the trend? Where's support and resistance? What are my moving averages telling me? You know, where is that's telling me a change in particular direction or momentum? Where is the RSI? Am I looking at something that's overbought or oversold? Where's my momentum? We can check MACD or parabolics for this. Does the RVI indicate any preference in directional change? And also, is there any immediate news out? I mean, our book has been flicking around quite aggressively recently, but obviously, you know, we are in a highly events driven, because of this coronavirus, news environment. So we've got to manage those hiccups by being extremely conservative on our risk. Okay, so it's important to commit to your trading plan and professional trader support, hopefully for your continued development. We look at moving averages. You'll be taught these here at ITA, and identifying trends is one of the key functions of moving averages. They are lagging, as I mentioned earlier, so they're not there to predict new trends. They help us stay in them. They're good at support and resistance, and we like them for that. We can see here weekly analysis on the NASDAQ how crucial the 200-day moving average has been. Okay, because this is 5 years data on the weekly, and we can just see even after it closed below recently after this coronavirus on its looking like on its knees, but the aggressive nature of the recovery has been very swift, and at a time when obviously the RSI was oversold, didn't stay there very long, and now momentum is ticking up. Okay, we can also look at the daily Dow analysis, the importance of the 200-day. I don't care if it spikes down, I'm not fussed about it. It's really if the body of the candle closes, you would get further propulsion down. It's a bit noisy, this particular chart, but here's just to highlight the importance of a longer term moving average. Okay, this is where Donald Trump got elected, but kind of how did that support? You know, one thing to remember as well, however far the price action deviates or moves away from its longer term EMA, this for example the 200-day, it will come down to touch it at some stage. And one thing I always teach traders is equity markets will go up in the stairs, down in the elevator. Okay, because they come down very sharply because there is a loss of trust. Everybody, there's a fear, there's the fear gauges or fear factor out there, so everybody pulls their orders. Okay, that is an EMA that we use. We look at trend support and resistance. Very simply, we'll show you how to do that. Just finishing up now, our clients, what our clients say, they kind of like us, and that's what testimonials do, really. That's fair enough. Anybody can ask us any questions at any time. We're very open. Again, some recently closed trades here. We will offer you weekday coaching sessions. We'll do those online at the moment. We'll offer you webinars and podcasts, and each month as well, we'll get you in to sit with us each day. Sorry about that. It's one of our chats. So we'll hopefully constant communication will again expedite your learning with us. Our monthly meetups happen at St Cat's Dock in our office, and the aim is for the trading community to get together. And it's a valuable tool because we have a good Q&A session. There's obviously no rush. Again, just leave that on the screen, have a quick look. You can revisit this presentation because it'll be on the Round the Clock Trader website, and you can obviously go through it a little bit in more detail yourself. So again, you have 2 free opportunities for you to see how we work. You can join our free Pro Trader Skype chat, or you can book in a free 30-minute remote session with myself. I'm happily talk to anyone about how that can work, no problem. We do have plenty of experience. We use independent brokers. We don't own a broker, or we don't own the charting software. We're very experienced at what we do. You can pay a lot of money for some 2 days. So I'm not here. I can't teach this in 2 days. I have to spend a period, a month of doing that. Somebody asked me, is that an EMA or a simple? It's an exponential, so it's an EMA that we use. And the reason I use an exponential EMA because it will allow our moving averages to cross slightly quicker than the simple one, purely because it takes more credence to nearer price data. Okay, we do have a funded account offer for traders. If they do well and pass an assessment period with us, we will offer them the opportunity to trade our funds, but we can go into that in more detail. And all we ask is you partner, learn, build your profits with us, and have an opportunity to earn. So really up to you now to take up the opportunity of the free offers today and see for yourself. This is where we live. This is who I am. And that is basically, I think my time is up. That is me done. I'm sorry for waffling on a bit, Simon. Back over to you.
No, at all. I'm just, you know, hoping that the training in the office is followed by a couple of beers at the Dickens Inn.
Oh, obviously, yeah, more than a couple. Two bid.
Being a past resident of St Catherine's Dock for a year, a long time ago, fond memories of the Dickens Inn. I hope it's still going strong, is it?
We can make some more.
Great stuff. Listen, Simon, Adrian, thank you for that. Great to see you got through a lot of stuff. I think the approach again is chiming with people here in the room. Gordon was saying, yeah, there was an example of the US unemployment, 5.25 million just came out, and he said that the Dow was rising on the back of that, just sort of confirming what you were saying 5-10 minutes ago. Do you have?
You will see a lot of that, yeah.
Yeah, absolutely. Do you have any particular broker that you suggest? Andrew was asking during the training.
Yeah, I mean, yeah, we use a company called Active Trades. You might have heard of them. They work. They've been around for 20 years. They're FCA regulated, and I've been using them for some time now. So we can easily put in our algorithms and bits and bobs. I've got a link for that platform if you wish to have it. So that's not a problem. We would guide you. If you don't have a broker, we would guide you that way to set up and get yourself going. No problem. So it's Active Trades, and they're actually in #1 Thomas More Square. So there's no other reason that we know the people there, and we just live very close to each other.
Fantastic. Now, Len was asking a question a little bit further back. I thought we'd leave it to the end. Go back to the charts. What is the proper way of cutting losses? Is it allowing the trade to go to the stop loss, or exiting the trade?
So really, let me just open up what trades we've got on here. So you can see we've got a plethora of trades open, some winning, some losing. Let me just, and I don't mind showing anyone account history if we've won, if we've lost. Okay, so we've had some, these are recent closed trades. Okay, so out of that 1, 2, 3, 4, 5, 6, 7, 8, we've lost 1 out of 8. So I can live off of that and eat very healthily. So what I would do, so can you see even here, so I've been proactive in my stop. Hit, say in a cable recently, my stop was above my entry. Now, I didn't have a target price in because I thought it was going higher, but we know markets can be volatile. And you know that Sterling New Zealand one is based similar to, what was this trade we had here? So it was here. All that 2% of my account, 3 grand or whatever it was, here was that was my 3,000. That was my 1%. Okay, and what we would do is help you. Say, for example, if I want to, particularly, I want to sell. I want to sell this at the level I'm going to put in on the break change of momentum. Okay, so I'm going to put that kind of level in there. That just alerts me, because I'm always looking at the charts. And I would say, oh, I'm happy to risk 1% if it gets there. So obviously, I've got to do a kind of sell stop order. But how do I know what 1% is? Well, we download this position size calculator for you. So all I do was type in 2.08314 is where I want to get in. Okay, my stop loss in the first instance, we don't we're going to place a stop so we don't want it to trade. That's what really we're trying to do. So really, can you see that there's a spike here? There's only one spike. It's gone above this kind of 2.1070. Sorry, there's them clients just talking on the chat. So here, 2.1071 could be a good level to place my stop. Okay, so I'm looking at the chart as we go. I'm looking at where the lines and where our resistance levels are, and you can see I'm only risking 1% of my money, not my leveraged amount. So my money is a couple of hundred, the equity is 200 in that one. So I would just pop that in there, and that would tell me here, okay, my position size to risk 1% would be 1.77 based on these parameters. It will change if I move my stop. Okay, so if I go into trading, new order, okay, I want to, my lot size on these parameters is this. Obviously that calculator just shows me where I need to be. I can get a 1-to-1 if it comes back to there, and yes, granted, I'm not trading with the trend, I'm going against the trade, so probably a little lower risk on the trade, but I'm just looking here. So 102 point, that's my stop loss is at 2.1071. I'm not going to put a profit target in it yet. I know the strategy is the FXFTM on the fast track momentum on the H4. It's not market execution, okay, it's a pending order. So it would be a sell stop at this price, 2.08314, yeah, and I would place that order. Okay, so where is that now? That is now in my pending account here as a sell stop. If I get triggered and it trades, then my rules have been met. Okay, ideally I want these two lines here, they're faster EMAs to have crossed, but I know once the parabolic, this is me being a trader, once the parabolics start interacting with these faster EMAs, you do get a sharp reversal, or you're more highly probable to get a sharp reversal. I hope that answers that question, or did I? Can you you're asking, someone's asked the question, can you ask the broker to cancel your trade after having placed it? Not once you're entered. I can cancel my sell stop because it's a pending trade. So yes, any pending trade you can cancel. You can see I can cancel these two. I can cancel these, but I would have to close them for my profit or loss at that time. If you put the trade in error, that's not the broker's fault. Okay, that's user error, unfortunately. If the broker made an error, of course you could, and they say you looked at you were trying to buy at 150 and they filled you at 156. You can say, well, how comes I got filled there when the price was telling me it was 150? If it's an error, that's an error on their part. But no, if you just put a pricing and you're losing and you phone up and say, oh, I didn't want to put that trade on, they might go, tough luck. The other EMAs I would teach you on anyone on the course. I don't want to give everything away for free, but obviously sign up to our pro Skype chat and you'll see a few more bits here. Here's another strategy that we use as well, based on whereas momentum you're buying in the direction of the trade, this is buying or selling as the price goes up or down. So again, predetermining or trying to help you discover what kind of trader you are. And it's a different mindset for each one. So a couple of nice strategies that we can help you with. I'm sorry, Simon.
Not at all, not at all. Adrian, thank you for that. Any more questions? Just last few minutes. I mean, obviously, get to see if you can take advantage of one of these remote sessions with Adrian. If you can't get into London, that's a great offer to pop up to the office and have a coffee and find out more about the way it all works. But of course, if not, there's Zoom chats. We're all online these days, isn't it? Fantastic. It's
it's definitely helped with my technical capabilities for sure.
But it's annoying the people that just say, "Oh yes, we just do webinars now," and I feel like saying I've been doing them for years.
Yeah,
so,
exactly.
But can only help. Excellent presentation. Stephen says that's been great. So again, just in case you don't catch that email address to get in touch with Adrian, it's info@intelligenttradingacademy.com. It's in the chat box there. A final question, maybe from Peter. Can you take a scalper and turn them into a swing trader or a trader of other instruments, please? So once a scalper, always a scalper? Or?
I think one thing that one must be aware of is to be very flexible within trading and be pliable, because some particular, I think when you're a scalper, you're a bit more jumpy and edgy. If you're like a slightly more conservative trader, a more longer term, and expect your positions to mature over a period of days rather than a period of minutes, it's a bit more of an easier process and a bit more calmer way of trading, and that's what we've kind of tried to teach. So yes, if you want to change from a scalper to something more conservative because you're losing money, it's obviously the sooner the better that you do it, if that's the reason why you're asking. If not, you can trade throughout the day. You can have multiple strategies in place, multiple methods, but hopefully everything will work for that particular individual. But yes, and definitely we will give everybody a fair crack at the whip.
Fantastic. Okay, well, listen, Adrian, it's been super to have you come in and talk to us. We appreciate the time for that, and hopefully some of us might, get in touch with you and keep in touch. But if not directly, through myself. But it's been super to have you, and hopefully we can invite you back again.
Okay, very much appreciate the opportunity, and hopefully look forward to doing a few more as time progresses. So thanks everybody, and I'll pop off just now.
We will do. Many thanks indeed. Thank you,
Thanks,
Adrian Slack.
Cheers.
Yeah,
bye bye.
Intelligent Trading Academy. There we are. So that's the it for this lunchtime, but not it for today, because we do have an extra webinar coming up this evening. Ben Kennedy at Araya Trading at 7 o'clock this evening. There's the link for that webinar tonight. So we're starting at 7 o'clock. Araya Trading, again, looking at tips for a lot of it's about risk management.
Yeah, it is hiding the server, isn't he?
Sorry, I think, did I take Simon's microphone off by accident? I'm not sure if we did. I'm not sure if you're talking to us or someone else. But anyway, listen, thank you everybody for attending today. I've enjoyed it. I hope you've enjoyed it, and we'll speak to you again shortly.